On the latest edition of ET Now on the Go, we caught up with Ravi Viswanathan, MD, TVS Supply Chain. He discusses the company's growth trajectory and order pipeline going forward. He also sees uncertainty in freight and manufacturing due to tariff changes. Let's have a look.
We have been focusing on expanding our global footprint for us to be realizing our vision of being amongst the top 50 supply chain companies in the world. And I think over the last couple of years, we've actually done a very good job in expanding that global footprint, really focusing on some marquee customers. Our focus has been in building the Fortune 500 customer base. So 4 years ago, we had about 50 global Fortune 500 customers. Today, we have 91 Fortune 500 customers as our customers. And that is the strength of the brand and also the strength of the team, which is, doing some phenomenal execution of projects and programs across the globe.
All right, and we can also see some of the accolades which are put out here. But moving on, and this quarter particularly, you had a loss of around 4 crore, which is significantly reduced if you compared with last year. But what is the path of profitability and sustainable profitability is the question which investors will ask.
Absolutely. I think the focus of the company is to converge towards a 4% PBT, which should result in about a 3% PAT, and that we should get in about 6 to 8 quarters, and that's really what we're looking at in the near term. And that's going to come on the back of some very strong initiatives that we have set out. One is, of course, I spoke about the quality of our customers and the revenue that you spoke about the pipeline, 5,250 crores of pipeline that we have created, and that conversion is really going to be instrumental in driving the revenue and the profitability momentum. Our mantra is profitable growth, and we will see that execution happening over the next 6 quarters to get converged to about a 4% PBT and a 3% PAT.
So that is the roadmap you have kept for the company. But more importantly, debt reduction is something which you will focus and should focus as per the, if I would say so, the investors would demand that. And more importantly, if you are investing in the company, then only that growth will be there. So what is the roadmap for debt reduction and investments in the company?
I think we have done a great job on debt reduction already. If you look at it, the company today has focused significantly in generating cash. About 195 crores is really what we looked at from an overall cash balance. I think the key for us is that today the debt is really only funding working capital. So that will continue, right. But that's going to happen because we are winning large orders, large projects, and we'll need that debt to fund the working capital. Otherwise, we have really got into a mode where we've reduced most of our other debts. Post the IPO, our debt has come down dramatically, and only the working capital debt is something which we'll probably have as we continue to grow the organization.
All right, and if I also take a cue from you, what is the vision for next 5 years? Is there a roadmap beyond 6 to 8 quarters which you have already chalked out?
Mm-hmm. So for us, like I said, the vision is to be amongst the top 50 global supply chain companies, and what that means is a combination of things. One is, of course, the quality of customers, and I think we are well on the road to get more and more marquee customers, both from an existing customer base, like I said, 91 Fortune 500 customers, and looking at the pipeline, we have a very strong quality of pipe, which is going to give us the quality of customers. Second is the use of technology. We have always led with technology, and some of the things that hopefully we can show you the next time is how we are using technology very innovatively. Our solutions embed technology which is grown in-house, and that gives the flexibility for the customers to work with us, and that's one of the reasons why we win in the market. And the third, of course, like I said, we are a global company, global footprint, and those are the things which will converge into taking us to the top 50 global supply chain companies by the end of this decade, and that's really what we look at. From an overall revenue perspective, I think the aspiration is to be, right now we are about just over $1 billion in terms of revenue, 1.1 billion. We hope to get to $2 billion of revenue over the next 5 years.
Yeah? Right. So with that aspirations, what are going to be levers of growth? Which pockets you see the growth will be there?
Yeah. Of course, India is a big market, right? India's GDP is probably leading across all the markets that we operate in. So India will be a continuous focus for us, and to grow the India size of the pie to about 30-35% over the next 5 years. Today it's about 27% of the overall revenue. Of course, the other big market is North America. Today it's about I would say mid-teens, and we want to grow that market also, because it's something where we see a lot of opportunities, and of course Europe. The newer markets that we want to get to is Middle East and Africa. Africa is really going to be, as we look beyond 2030, Africa is going to be a place where there's going to be significant economic activity, and it will be early seedings that we will do over the next, I would say, by the end of the decade, to start our growth in that continent. So Middle East, Africa are areas where we are investing in. North America, Europe, and US will continue to, in India, will continue to grow our presence. And again, the strategy is really about technology, solutions, flexibility, and the ability to be very agile, reacting to customers.
Since you have mentioned about technology, one question which is in everybody's mind is the use of AI.
Yes.
And how you are adopting that and also changing the way you do things?
So firstly, we have a very active AI practice within the company. We have marquee engagements in India, in the US, and in Europe, where we have deployed AI at scale. For example, in India, we have AI using visual computing in one of our large customer solution warehouses in Hosur, where we are completely eliminating the need for human discerning the parts which go into a kitting, and that has eliminated any errors. Today we are able to get the numbers well beyond Six Sigma in terms of quality out of that engagement. So we have deployed AI at scale, and all that is using our own in-house grown software. We have our own, you can say, ChatGPT like tool, and it's called Sidekick.
You mentioned about geographies, but specifically in India, what is the focus area? Are there any particular products which you are focusing on, or services which you are offering?
So ours is a 100% services company. So our target segment has been the manufacturing segment. We have a very strong presence in the manufacturing segment. The Make in India is a great opportunity for us to be partners to our customers who are building out of India. Even as we speak, we are working with one of the largest alternate energy providers who are building to scale in India.
If you like this video, then like, share and subscribe to ET Now.